Welcome back to the channel, or welcome to the channel if it's your first time here. My name is Troy, and every Friday at 8 a.m. Central Standard Time, I share 5 dividend stocks that you need to know about before the upcoming week.
Red alert! Red alert!
If you're a dividend investor that's looking for your next dividend stock, then you're in the right place, as in today's video, I'm going to present you with 5 options that keep getting better and better as we go. Now, on my channel, I always talk about the importance of having filters and the role they can play in helping you narrow down your search, and these videos help put that into practice. For example, the research for this video started with 163 stocks that had ex-dividend dates between May 27th and May 31st, which is far too many stocks to look through, so just by applying 2 simple filters, a dividend streak of 5 or more years, and a favorable performance versus the S&P 500 over the past handful of years, I was able to go from those 163 stocks to 55 stocks, and then from those 55 stocks down to just 20 stocks, or 12.27% of the original list. Once I got down to those final 20 stocks, that's where I took the time to review each and every one of them to determine which 5 you needed to know about for this coming week.
There's something I need to say first.
Now, by no means am I telling you to spend your hard-earned cash on these stocks just because I'm talking about them, but I am hoping that by watching this video, you're going to get some exposure to some fantastic dividend stocks that you can look into to see if they are perhaps the missing piece to your portfolio.
There's a piece missing.
If you're in the market for a place you can get quality dividend stock information week after week, please consider subscribing to the channel, and while you're down there, click on that little thumbs up button as it helps me continue to grow my channel. Now, before I dive into these 5 stocks, I want you guys to remember something. As you watch today's video, keep a lookout for any stocks you might already own or any stocks you might want to add, and let me know all about it in the comments down below. But now, let's start this video off with a name you all know. Coming in at number 5 is Home Depot, stock ticker HD. Home Depot is a quarterly payer in the consumer discretionary sector, paying $9 per share per year with a forward dividend yield of 2.61%. Home Depot has been paying and growing their dividend over the last 15 years. They have a 3-year dividend growth rate of 11.48%, a 5-year dividend growth rate of 13.88%, and a payout ratio of 43.13%. At the time of recording, Home Depot was trading 13.27% off of its 52-week high. It has an ex-dividend date of May 30th with a payout date of June 13th. And this chart right here is going to show you the growth of $10,000 with and without dividends reinvested versus the S&P 500. Up here at the top, we have $10,000 invested while reinvesting the dividends. Home Depot would have turned into $56,687.29, whereas the S&P would have turned into $33,598.06, meaning Home Depot outperformed by $23,089.23. Down here at the bottom, we have that same 10K, but this time without reinvesting your dividends, where Home Depot would have turned into $51,612.39. S&P brought back $30,874.44. That's a difference of $20,737.95. And the difference in Home Depot between reinvesting and not reinvesting those dividends was $5,074.90. Let's keep this train moving. Coming in at number 4 is S&P Global, stock ticker SPGI. SPGI is a quarterly payer in the financial sector, paying $3.64 per share per year with a forward dividend yield of 0.82%. S&P Global has been paying and growing this dividend over the past 51 years. They have a 3-year dividend growth rate of 9.1%, a 5-year dividend growth rate of 11.77%, and a payout ratio of 22.72%. At the time of recording, S&P Global was trading 4.18% off of its 52-week high. It has an ex-dividend date of May 29th and a payout date of June 12th. And up here at the top, that $10,000 investment with the dividends being reinvested would have turned into $62,518.66, which outperforms the S&P 500 by $28,920.60. Down here at the bottom, that $10,000 without reinvesting dividends would have turned into $59,215.67, which outperforms by $28,341.23. And the difference between reinvesting and not reinvesting those dividends was $3,302.99. And deserving of the bronze medal this week, coming in at number 3 is Griffin, stock ticker GFF. GFF is a quarterly payer in the industrial sector, paying 60 cents per share per year with a forward dividend yield of 0.89%. Now, GFF has been paying and growing this dividend over the past 13 years. They have a 3-year dividend growth rate of 21.07%, a 5-year dividend growth rate of 14.06%, and a payout ratio of 10.42%. At the time of recording, Griffin was actually trading 13.73% off of its 52-week high. It has an ex-dividend date of May 29th and a payout date of June 20th. And investing $10,000 and your dividends in Griffin over the past 10 years would have brought back $81,723.23, which outperforms by $48,125.17. Down here at the bottom, that $10,000 while keeping your dividends would have brought back $66,315.24. That's a difference of $35,440.80. And the difference between reinvesting and not reinvesting those dividends into Griffin was $15,407.99. As a quick reminder, if you're enjoying this video and finding it helpful, let me know that by leaving a like on this video, as it helps me grow my channel and I'd appreciate that. And if you have anything to add or even content you want to see, let me know that down in the comments below. But now let's get to the top 2 stocks that you must know about going into next week. Coming in at number 2 is Advanced Drainage Systems, stock ticker WMS. WMS is a quarterly payer in the industrial sector, paying 64 cents per share per year with a forward dividend yield of 0.37%. WMS has been paying and growing this dividend over the past 10 years. They have a 3-year dividend growth rate of 15.87%, a 5-year dividend growth rate of 11.85%, and a payout ratio of just 8.36%. At the time of recording, Advanced Drainage Systems was trading 5.5% off of its 52-week high. It has an ex-dividend date of May 31st with a payout date of June 14th. $10,000 into WMS 9.82 years ago with the dividends reinvested would have brought back $120,211.37, which outperforms the S&P 500 by $88,283.45. And that $10,000 investment into WMS without reinvesting your dividends over the same time frame would have turned into $110,503.28, which outperforms by $81,073.48. And the difference between reinvesting and not reinvesting those dividends into WMS was $9,708.09. And here it is, red alert. The stock you must know about going in the next week is Kinsale Capital Group, stock ticker KNSL. KNSL is a quarterly payer in the financial sector, paying 60 cents per share per year with a forward dividend yield of just 0.15%. Now, Kinsale's been paying and growing this dividend over the last 8 years. They have a 3-year dividend growth rate of 14.48%. A 5-year dividend growth rate of 14.48%, and a payout ratio of just 3.46%. Now, Kinsale Capital Group might be at a fantastic buying opportunity, as right now they're down 28.73% off of their 52-week high. They have an ex-dividend date of May 31st with a payout date of June 13th. And if you thought that last chart was crazy, take a look at this one. A $10,000 investment into KNSL with the dividends reinvested just 7.8 years ago would have turned into $218,270.91, which outperforms the S&P 500 by $190,359.57. $10,000 into KNSL without reinvesting those dividends would have brought back $213,840.93, which outperforms by $187,420.01. And the difference between reinvesting and not reinvesting those dividends into KNSL over the past 7.8 years was $4,429.98. And with that, remember, I want to hear from you. Do you guys own any of the 5 stocks mentioned in today's video? And if so, how are they doing for you?
Tell me.
If you don't own any of them, did anything from this video pique your interest? Let me know down in the comments.
Ooh, oh, there's a comment. Mama's got a comment.
I look forward to you guys coming back each and every Friday so I can keep providing you with the best of the best dividend stocks, so make sure you're subscribed. Lastly, if you happen to miss last week's video, make sure you guys are checking that out right here. But until next time, see you.